decline in sales with respect to the Q3 of the previous year. Supply chain issues are gradually getting eased out, while the underlying demand drivers still remain intact. Our sales have recorded a growth of 17% in the current quarter from Q3FY21 due to our diversified product portfolio and strong aftermarket growth. The company has also been able to post historic high sales for two successive quarters. As per the data published by SIAM, the overall industry production in the third quarter of FY22 was down by 20% from Q3 of FY21, owing to the degrowth of both passenger vehicles and two-wheeler segments by 12 and 23% respectively, whereas the production of commercial vehicles and three-wheelers remained flat. The massive pace at which technological progress is happening in the auto industry, greater impetus on localization through PLI schemes gives incredible opportunities to your company to move ahead in this journey. With our diverse JV partners, we continue to drive innovation across our product lines. We appreciate and thank the government for introducing the PLI scheme for auto and auto component players. We are happy to announce that Lumax Auto Technologies has applied for production-linked incentive scheme in collaboration with our various joint venture partners. Speaking about the union budget, we welcome the measures taken by the government. It is a growth-oriented budget focusing on building long-term strength using investment as the growth driver while maintaining policy stability and inclusivity. Steel price cooling off measures will help the entire manufacturing sector. Stimulus to charging infrastructure and energy storage systems, along with government support in R&D for clean energy, green mobility, and semiconductors will help the auto sector immensely. Let me now take you through the performance of each business entity. The standalone entity caters to integrated plastic modules, aftermarket business, chassis and swing arm for two-wheelers, trailing arm for three-wheelers under the metallic business, and two-wheeler lighting. The standalone entity has contributed 78% of the total consolidated revenues for the 9 months FY22. Lumax Mano Allied Technologies, a 55% subsidiary which manufactures manual, AMT, and automatic gear shifter systems and has the market leadership position, contributed 13% to the total consolidated revenue. The company has successfully started export of made in India automatic gear shifters for a global platform since the last 2 quarters. Going ahead, we are working closely with our JV partner for a wider outreach globally. Lumax Cornaglia Auto Technologies, the 50% subsidiary manufacturing air intake systems and urea tanks, commanding 100% share of business with Volkswagen and Tata Motors, contributed 6% to the consolidated revenues. This joint venture holds a strong order book and shall increase its contribution in the next year. Lumax Metallics Private Limited, the 100% subsidiary manufacturing seat frames, contributed 2% to the total consolidated revenues. The board of directors have approved its merger with the company for efficient utilization and synergy of resources. The appointed date of merger will be April 1, 2022, subject to necessary regulatory approvals. On Lumax Fire Technologies, I am very glad to announce that the company has received LOI from 2 major OEMs for oxygen sensors, SOP of which is expected in FY23. The annual revenues of these LOIs would be more than 100 crores annually. Lumax York Allied Technologies is a 50% subsidiary engaged in the design, development and manufacturing of gear shift towers, automated manual transmission kits, all gear sensors and ports. The production has started to pick up as per the OEM schedules. Lumax Ituran is a 50% joint venture with Ituran Telematics of Israel. Subsequent to quarter ended December 31, 2021, the joint venture company has become a subsidiary of the company in accordance with Ind AS 110 consolidated financial statements with effect from January 1, 2022. Going forward from Q4 FY22, its revenue and profitability will be included in the consolidated financials. Lumax Alps Alpine India Private Limited a 50% subsidiary for the manufacturing and sale of electric devices and components, including software related to the automotive industry, has started its commercial production at Gurugram, Haryana during the quarter with effect from December 1, 2021. The single month revenue of the JV is 1.7 crores, and estimated revenue for the current full year is at rupees 8 crores. These partnerships with global leaders are strengthening our core businesses and enhancing our diversified product offering by leveraging global technologies. The company is well positioned today. We have best combination of new products as well as an expanding wallet share with the current product line. All this is to serve the customers' expectations and stay on track to reach our goal to multi-fold the revenue trajectory. I'm happy to share some details on the new launches made during the quarter having your company's products. In the passenger vehicle segment, we launched the gear shifter system for Maruti's new Celerio model and plastic parts for the new Kia Carens model. And on the two-wheeler segment, we launched the air intake system for the Scrambler and Adventure models of Yezdi under the Mahindra & Mahindra umbrella. Now I would like to hand it over to Mr. Sanjay Mehta, Director and Group CFO, to update you on the operational and financial performance of the company.
Good morning, everyone. I will brief on the operational and financial performance for Q3 and 9 months ended FY22. For 9 months FY22, integrated plastic modules contributed 25% to overall revenue, followed by aftermarket at 19%, chassis at 18%, gear shifter at 13%, lighting products at 12%, and emission at 6%, and others 7%. Two and three wheelers contributed 46% to overall revenue, passenger car at 19%, aftermarket at 19%, and CVs at 9%. With respect to financial highlights, the consolidated revenue stood at rupees 428 crores for Q3 as against 365 crores last year Q3, up by 17% against industry downfall of 20%, which is due to increased sales in almost all the OEMs coupled with excellent growth in aftermarket division. This increase is also aided by price correction of earlier quarters from OEM amounting to rupees 18 crores, which is added both in revenue and raw material consumption as per normal practice. Thus, the comparable revenue for Q3 is 410 crores, up by 12% from Q3 FY21. For 9 months, the company reported revenue of 1,090 crores against
yes, sir, you're audible.
Hello. Hello.
You're audible, sir.
Yeah, I'm audible?
Yes, sir, you are.
Yeah. So for 9 months, we reported revenue of 1,091 crores against the 720 crores during the same period last year, up by 52%. The company reported consolidated EBITDA of 48 crores in Q3 as against 43 crores in Q3 of last year. EBITDA margins stand at 11.2% for Q3 FY22 as against 11.7% for Q3 FY21. The comparable EBITDA excluding price correction of earlier quarters for Q3 comes out at 11.7%, which is in line with Q3 FY21. For 9 months, EBITDA is rupees 114 crores at 10.5% as against 67 crores at 9.3% in 9 months FY21, up by 120 basis points. Profit after tax after minority interest stood at rupees 22 crores in Q3 against 23 crores in Q3 last year. For 9 months, it stood at 48 crores as against 26 crores in 9 months FY21. The capex incurred during the 9 months is 39 crores, including rupees 15 crores on account of right to use assets. Thus, the actual capex outlay is 24 crores. For the full year, the capex is estimated to be in the range of 45 to 50 crores, excluding the right to use assets, as mentioned earlier. Now we open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Thanks for the opportunity and congrats for a strong set of numbers in a tough time. Sir, we have seen sharp jump in sheet metal business. As you mentioned earlier that you have won several business in the system and KTM as well. But if you see the numbers of the most of the auto companies, they are looking at sharp jumps in this business. Is it because of the increase in realization or because of the commodity inflation or some structural changes is coming? I mean, more localization is happening and you are all Indian companies are winning more business.
So Abhishek, if I could understand correctly, your question is on the metallic fabrication business, and you're saying that it has seen a strong growth on a year-on-year basis, and what is the reason for that growth?
Yes, sir. As you mentioned earlier also that the reason is because of that you won the new business from the street train and KTM. But I wanted to know, is there any structural changes is coming in the industry? That's why Indian companies are winning more business, because most of the auto components are showing a very strong number in a sheet metal part.
Okay, so our sheet metal presence is largely on Bajaj Auto. And as I had mentioned earlier, that we have gained significant wallet share, expanding our product presence in the chassis category, not just on the export models, which were the ones we used to cater before, but also getting into the premium bike space of the KTM. And going forward, we are in discussions with Bajaj to also service certain other platforms of them. So for us, this growth is purely based on the wallet share of Bajaj Auto. And we see that we are now a very strong supply chain partner of Bajaj for their sheet metal and chassis business, and that will definitely continue to build upon.
So in sheet metal business, you have started supply to the Chetak as well?
Not yet. We have not started any supplies of any parts to the Chetak yet, but we are in discussions with the company for maybe expanding our presence in the Chetak platform going forward.
Okay. The next question is related with the plastic molded part. As you have started to supply in the four-wheeler space and you won the business from the MSI, Hyundai and Kia. So what is the outlook for this business in the four-wheeler side, especially in the plastic molded part?
So as I had mentioned earlier, I think strategically plastics as a domain continues to be of significant importance to the company. I think we have already made some good inroads in the two-wheeler plastic business, be it for Bajaj or even for Honda. And we have made some entry into the four-wheelers through the Koreans and also Maruti Suzuki. Clearly, over the next 2 to 3 years, our strategy would be to expand our presence in the four-wheeler plastic space and also go from regular plastic products to more value-added technological kinematic parts, which will also enhance the realization per vehicle. So clearly, four-wheeler plastics continues to be an important strategic growth driver for the company in the coming years.
So what is the revenue contribution from the four-wheeler plastic molded part right now, as you have started supply to the MSIS?
So out of the total kitty of the plastic business, roughly about 10% of it would be coming from the four-wheeler space. 90% of it is still from the two-wheeler space, but we do expect this to constantly keep expanding on the four-wheeler front.
So what mix we can expect in FY23, four-wheeler versus two-wheelers in the plastic molded part?
It's difficult to predict or give you an estimate right now because these plastic parts do not have a significant lead time of development. But in FY23, I would think that from it should go at least by double. So instead of 10% contribution, it should at least go upwards of 20% of the total plastic pie.
Great, sir. And sir, despite semiconductor shortage, we have seen sharp jump in the gear shifter business. Is it because of the incremental revenue from the export to Honda, or because of increase in realization, because increasing share of the SUVs, which led to the higher demand of the AMT and AT?
No, so there have been significant reasons. I think semiconductor is an ongoing challenge across the industry. But I think our growth of gear shifters on a year-on-year basis is not significantly because of exports. It is largely because of a higher penetration and also adding new customers, like in the commercial vehicle segment, and also expanding our offtake with Mahindra and Mahindra. And we've also increased our share of business in Maruti Suzuki and Tata Motors. And we all know Tata Motors has recorded a very strong set of production numbers despite the semiconductor issue. So all in all, we have definitely gained and continue to be the market leader.
So in last 9 months, how was the revenue contribution from the MT and AT side?
So about 80% is still MT, and about 20% would be a combination of automatic and AMT.
Okay, sir. And sir, as the share of the SUVs are going up, don't you think that it will go up significantly, around 40-50% in the coming days?
Yes, we do expect that by FY25, give or take in 2 to 3 years, the portion of AT and AMT should be at least about 40 to 50% of the total pie, because we also understand that the realization per vehicle of a AT is much more than that of a MT. So maybe not number-wise, but value-wise, sure, it should be 40 to 50%.
Okay, sir. And sir, you are looking at great opportunity in the electronics and telematics products. And you are looking to start the production from through your JV as well from this quarter. So from FY23, what numbers we can expect on the JV side, especially for the telematics and electronics or sensor?
So the JV with Alpine, we have already started production, and obviously this year we will only get about 1 quarter revenue, but next year we do expect that we should be doing about 30 to 40 crores of revenue of this JV. And again, we are in the discussions with key OEMs for significant order wins, which will probably come into production in FY24 onwards. And from there, we do expect a significant scale-up of this joint venture on the electronic products.
And what would be the break-even points from this JV in the revenue terms?
I think by next year end, we should have a better visibility of, but I think give or take around 40 crores or so should be the net break-even point. Obviously, we will be a cash break-even at a much lower revenue as well.
Okay, sir. My last question is related with the new order book size. So what is the current new order book size, and out of that, how much is the replacement?
As I had mentioned earlier, the order book, which I had mentioned last time, stood at approximately 450 crores, which included almost 330 crores of new orders and about 110 crores of replacement. Out of which I would say in the current year, we've already done about 120 to 150 crores out of the 450, and the remaining would come in FY23 and some would peak in FY24.
And how much is from the EV side, sir, out of that these new orders, 400 crores?
EV right now is insignificant, but over the next 3 years, we expect perhaps roughly around 5% of our total revenue should come from the EV pie. And largely that would be driven by the electronic JV of Alpine and also the gear shifter.
Okay. And this is because of supply into the BMS, all these sensors?
Well, it will eventually make a part of PLI as well. Our applications, as I mentioned, incorporates all the JVs as well. But yes, some of these products will come under the PLI.
Okay. Thanks, sir. That's all from me.
Thank you.
Thank you very much. Participants, you may press star and 1 to ask a question. The next question is from the line of Akshay Jain from Jain Capital. Please go ahead.
Yeah, hi. Good morning, sir. Firstly, I wanted to just continue on the Lumax outside side. So, are we replacing any of the competitor here, or is the order purely from new models?
So we will be not replacing a competitor, but we will definitely be eating into the competition's wallet share. Please understand, Alpine already has an existing infrastructure and market presence in India with a running business with some of the OEMs in India. The company has taken a position in that entity by itself to form this JV. So it is not a ground zero startup. We already have a revenue stream which we have gotten into. And now we will like to get some new orders and scale it up. So answering to your question, it's not replacing a competition, but it is definitely penetrating into the wallet share of the competition across different OEMs.
Got it. So what are the margins on this product as compared to our other business verticals?
Let Vikas take that.
So margins on these products range anywhere between to level. Plus, there is a market opportunity for new age product introductions, which would be regulation driven, like steering angle sensor and other products, where the margin could be a little higher also. Coming back again to the that you asked, which Mr. Boljan answered, we are very well placed with the dominant competition being only one player in most of the product segments. So there is a market opportunity to scale up to even 50% of the total market potential in India on the products with Alpine.
Just to supplement that, as I had mentioned, I think the products of Alpine are technologically advanced, and we see a very limited number of suppliers present in India for these products. And hence, we feel that with Lumax and Alpine joining hands, we should be able to significantly take a piece of this pie and get a sizable market share for these products in India. On the margin front, I've always maintained that going forward, our endeavor would be continue to get into product lines where the margins continue to be in the double-digit space. That has always been the endeavor of the company in order to expand the margins.
Okay. Lastly, can you discuss in detail the merger with Lumax Metallics? What kind of synergies are we expecting from the same?
Metallic synergy.
Lumax Auto Technology, I mean the standalone companies having a chassis and swing arm and the trailing arm business, which is similar to what we are doing in the metallic business, seat frame. So after merger, besides the taxation benefits, a lot of fixed cost advantages there, besides the similar product line.
Okay, got it. That's all from my side.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Neha Parekh from Raga Securities. Please go ahead.
Good morning, sir. Thank you for taking my questions. Sir, firstly, congratulations on the good set of numbers. I had a few questions, like as it is mentioned by big players that the quarter was quite challenging. So, sir, which factors have helped us in booking like the good revenue? And secondly, sir, on your product side, like the others and the shifter has shown good growth. So can you discuss more in detail about other business and other factors which are growth driven for the quarter?
Thank you, Neha. I think first and foremost, I would say that our diversification in the products and OEM is one of the key reasons why we are able to insulate the market dynamics completely. I think if you look at the Q3 on a year-on-year basis, obviously the company has grown by 17% in revenue, whereas the industry performance is very, very different. And again, as I had mentioned, this is a combination of getting into scaling up of certain new product lines and JVs which we had recently gotten into, also expanding our wallet share of the current product line. So if you look at my quarter 3 performance by itself, pretty much across product lines, whether it's the plastics or it is the metallic or even aftermarket, I have had a very significant growth across different product lines, much higher than my principal OEM customer growth in those product lines. So that I would say is largely one of the reasons why we've been able to have a good revenue run. And in terms of the margins, when you mentioned, I think we are very clear that our efficiencies are driving, we are obviously driving better efficiencies across product lines. The incremental revenue always adds to the incremental contribution. And for certain specific product lines like the emission, we've been able to also expand margins based on certain cost rationalization measures. So it's a culmination of all of these. Aftermarket, as I said, if you look at a 9 months, aftermarket has grown more than 50%, which is a very strong growth. And aftermarket does garner a better margin compared to some of the OEM businesses as well.
Okay, sir. Sir, so secondly, my other question is, sir, how do you see the demand scenario for Q4 and going forward? Like, from which segment are we experiencing higher demand?
So if I were to look at the overall demand, I think certain challenges like the semiconductor will surely continue, even though the supply chain and the availability of semiconductors have definitely eased out. Based on whatever the inventory levels are there in the system, I do believe that passenger car will continue to outperform the other segments. Passenger car will still have a strong growth in Q4 and also spilling over to the next financial year. I think two-wheeler as an entire segment will probably continue to be under pressure, but I'm happy to share that because of a significant presence of your company in Bajaj Auto and Bajaj Auto's significant presence and dependability on the exports insulate us from these two-wheeler challenges as well. Because the Bajaj Auto has done fairly well despite the domestic challenges because of their export commitments and export volume. So these are the two segments which obviously contribute significantly to the company. Commercial vehicle also is not a significant contributor, but we do expect that in quarter 4, overall the performance would be much better than quarter 3 at an industry level.
Okay, sir. Sir, this was very helpful. Thank you so much, sir.
Thank you, ma'am.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Apurva Mehta from AM Investments. Please go ahead.
Yeah, congratulations on excellent numbers. Sir, just wanted to know your outlook for the auto industry for FY23, and how do you look post this, where does you see some easing of semiconductor? What is your outlook and where our company would stand in this challenging scenario?
Apurvaji, I'll let Mr. Deepak Jain answer that. He has in-deep knowledge of the industry, so I'll let him answer.
Yeah. Hi, Apurva, Deepak Jain here. So I think it's a difficult question given the current scenario, because whenever we have predicted in FY22 or 21 is probably wrong. I hope our predictions for the industry don't go wrong this time. Definitely the industry is looking at, let me first put it, better quarter-on-quarter performance. As Anmol had just mentioned, Q4 would be better than Q3. It has multiple factors to be done. Number one, obviously the economy, as far as the macro factors are concerned, is starting to gear up. When you see as a long-term vision of the government, they want to actually disinvest, they want to actually put into the infrastructure, and this will all help the mobility. We should also get a lot more benefits now from an industry point of view because of the, I would say, customer as well as the government's intent to do more exports, and also these PLIs would help in further driving the localization ecosystem. Overall, I think FY24, or 23, we expect actually a double-digit growth, which would for certain segments may even come close to the FY18 kind of performance. Also, I think we're pretty bullish that with the regulations coming in 24, there would be good opportunities to develop and probably further add value products and actually get more value additions on it. Challenges still remain, would be two fronts. I think semiconductors, although I think the industry has grappled with it and also managed the way we are able to procure stock as well as, change some sources, there is actually a lot of confidence that going into FY23, we probably would have a much better handle on semiconductor issues. However, I think the only challenge which we foresee is actually how the commodity prices will behave, because that is actually inclusive of various factors. It's not anymore just inflation, it is actually hyperinflation. Government and industry is in discussions with how to actually control the prices. But I think you've seen a lot more passing on of basically prices to the end consumer, and that does affect the affordability. And the last challenge which we foresee is also the regulations kicking in. You have seen certain policymakers announcing, very, very strong, I would say, safety and emission measures, and also probably also, alternate fuel measures. All this coming in would obviously enhance and increase the prices of the vehicles. However, at the component level, it gives us an opportunity to actually further participate in these. So definitely, I think Q4 short term, we can definitely see a better visibility and we see a better performance coming in as Q3 for the company. But I think next year also, we are pretty much bullish that we would probably kind of get into a double-digit growth.
Great to hear from you. Yeah. Sir, on the new order from this oxygen sensor, when it will start, generating revenue for us? For this will be next year or post next year?
So in FY23, more like third quarter onwards, we should start. Currently also we are generating revenue. It is not that we are not generating revenue as on today, but the significant change because of these LOIs will start kicking in from Q3 of FY23.
Primarily, if you see, we had actually formulated this joint venture primarily to get into the whole BS4 to BS6 transition, where in BS6 implementation, you would need oxygen sensors for two-wheelers. Obviously, due to Corona, due to multiple reasons, we could not take it off, but at least the last 2 years, we've actually tried to actually get and do a lot of marketing with our customers. And now with the OBD2 coming in, which actually makes a mandatory 2 oxygen sensors in the two-wheelers coming in from 24, we have secured at least about the order books, and hopefully we would be getting about 75% or 80% booked installed capacities on these LOIs. Hopefully we will expand it further. But I think our first step is to basically convert all the installed capacities into orders. And as Anmol said, it would start from H2 for preparation of basically the OBD2 launch.
Okay. And any development on the Ituran side, any orders or any significant amount of development coming?
So we had mentioned earlier that we have a very strong order book from one customer, which is Daimler. We have that's the first big
order win for the company. And since Daimler's discussions are ongoing, we have also been able to expand our relationship into new segments of Daimler. So what we had, one was on the truck division for Daimler, but now we are also in discussions for the bus division of Daimler. This order book by itself was about 30 to 40 crores, and we are now also talking to one more OEM with order book which should get realized FY24 onwards.
Okay. And the kind of margins we should enjoy in this must be substantially higher because it's pure technology. Is our understanding right?
So, yes, margins would be higher compared to some of our product lines, but again, on margins, they are market dynamic driven. But I always say that our endeavor is that overall as a company, we would like to inch forward towards the teen EBITDAs, and hence our endeavor would be all our product lines should be at least delivering, give or take, those EBITDA margins. But for this, it would be definitely slightly a shade better than what the other product lines are delivering today.
And on this gear shifter side, the order we won for the new Celerio, it is single source or we are what is our stance now?
No, we are single source. In most of the models, we have a single source status across different platforms across OEMs. But this is a fully automatic gear shifter, which we are the only source for.
And what will be the what will be size of this order? I mean, just roughly, if we can for next year kind of thing, generating revenue for us.
So gear shifter, as I had mentioned, the order book in totality for the gear shifters was roughly about 150 to 160 crores, which we saw, out of which 115 crores was new orders and about, give or take, 50 crores was replacement orders. Celerio as a product for us has always been our model. So for us, it qualifies under the replacement, and for this particular business, about close to 20 crores would be the annual order value.
Okay. And one more thing on the Alpine JV, we were going to have this contact coil and steering angle sensor, start-stop switches. So can we understand the size of this market size of this product or something like that? So we can just analyze it. How big the sizes are of any of these products, if we can.
So I'll just give a comment and then I'll let Vikas give you more details about this. I think clearly the products which Alpine brings on the table, as I mentioned, are 8 technologically advanced products in the electronic space. Number 2, as I mentioned, that some of them will be driven by regulation. For example, the clock spring, as the airbags become mandatory, it will be pretty much a regulatory item. Also, certain other steering angle sensors will also form a part of the regulation. So we feel that the demand would be significantly driven by regulation and also because of scarcity of existing players in this product category. Most OEMs are looking at de-risking as a strategy, and hence the need for someone like Lumax Alpine is high on their priority. So these would be, on a strategic level, the 2 growth drivers for the JV. But I'll let Vikas give you more color on the size and the opportunity of this JV.
So we have entered a very exciting product segment, and to add to what Mr. Anmol Jain just mentioned, a lot of these products, as I said, being regulatory driven also, like with the mandatory use of airbags, contact coil, the deployment mechanism of the airbag becoming more critical, steering angle sensor again becoming a regulatory driven product. So FY24 onwards, we see a combined market potential in power window switches, contact coil and steering angle sensors to be upwards of 600 to 650 crores per annum on a 4 million kind of passenger vehicle production forecast. Happy to say that there are going to be only 2 or 3 dominant competition here who are currently operating at almost 70 or 75% share of the market. So this JV will be challenging their dominance and will be having a very, very good potential to bat upon.
And when can we start our we must be having starting the production and the capex to be done for this. So what is the timeline for this capex, and when can we see the production starting for this?
So we've already started some commercial production in this quarter. And as I mentioned in my opening, we are looking at about an 8 crore revenue for the current year.
Yeah.
And the same production next year should be looking at around 30 to 35 crores. But we will be putting in certain capex in the coming financial year, mainly to prepare ourselves for some of the future orders which we would be formally closing very soon. And I would be able to only share those details henceforth. But to prepare for that production, we will be putting in some capex in FY23.
And what will be our capex for next year if we have drawn some line?
So overall, as a company, as I mentioned, this year, give or take, Sanjay mentioned we will be around 45 to 50 crores capex as a company as a whole. And next year, we expect a similar number to continue. Maybe about 50 crores or so.
Including this Alps JV which we'll be doing?
Yes, including our share of the capex for the Alps JV.
Okay. So next year we should be close to 2,000 crores revenue?
Well, difficult. If this year, let's say, we were to look at growth rate of 30% or so, you would be clocking somewhere close to 1,500 crores for the current year. And on that 1,500 crores, if I were to peg another, give or take, 25-30% growth, so it comes to 2,000 crores. So yeah, that would be our endeavor. But again, we are all living in a very volatile market. So I don't want to get the hopes too high, but surely our endeavor would be to continue driving growth at a similar rate even in FY23.
And the margins will be close to 12% plus kind of margin on higher turnover, that we can expect that?
Well, I would say, Purvaji, that I think we have been able to first and foremost sustain the current EBITDA margin.
Yeah.
So if you were to look at the current margins, they're standing somewhere around 11.5 to 12%.
Yeah.
I think that is what we should be able to sustain next year. And with the incremental revenue and let's say certain product lines also expanding, our endeavor surely should be to try and touch the 12% mark. And as I said, our midterm plan is to get to the teen EBITDAs, but that would be our endeavor for FY23.
Great. So last suggestion was there, just a request, distributing large 30-40% of dividend policy, which is highly taxable nowadays. Are you looking? We would suggest you to have some kind of a buyback kind of a thing that all of us are paying huge amount of taxes on the dividend also. So my suggestion is that you should look at the route of doing a buyback kind of thing, and reducing the equity, which is always helpful for the long run time. This is my suggestion. If you can, take it forward.
Okay, we'll take it into consideration. Thank you for your suggestion.
Thanks a lot, and wish you all the best.
Thank you.
Thank you very much. Participants, you may press star and 1 to ask a question. The next question is from the line of Priyanka Singh from Atigan Securities. Please go ahead.
Yeah, good morning, sir. So, sir, as you mentioned that you have applied for PLI scheme, Can you share about product details and how much benefit we are going to get from the same?
Sure, I'll let Vikas give you some light on that.
So thank you, Priyanka, for that question. As you are aware, under the automotive segment, the OEMs have a scheme running for which the results are already out. On the component side, at the advanced automotive technology components, you'll be happy to know that on your company side, there are 5 JVs that have qualified with their products in the first application list. The threshold investment figure would be definitely exceeded significantly, and it would be able to generate a 3x kind of revenue on the proposed investment capacity, both at Lumax Mano, Lumax Cornalia, Lumax FPE, and Lumax Ituran, which is a subsidiary now called Lumax Auto Technologies. So I will request Mr. Deepak Jain to supplement.
No, I think we are, as I said, have applied through Lumax Auto Technologies for 5 entities of the JVs. We are very bullish that our applications would be accepted, and once it is accepted, we would be able to meet the investment criteria and get revenue growth. So I think that's important. I think we still would wait for the application approval till we're able to then disclose what kind of plans we have for our JVs and how it will impact.
But I would just like to add that I think we are very happy and fortunate that most of the key product lines in the current part and even for the future growth do fall under the PLI scheme. So we are quite hopeful that once if we are through with the PLI scheme, it will definitely add significant value to the company in the coming years.
Okay, that was helpful. Apart from that, any of our production plants running at full capacity, like what kind of capacity utilization we are expecting in Q4, and and do we expect like any further investments for existing products to increase the capacity?
So most of our product lines are currently running between a 75 to 80% capacity utilization. In Q4 also, we expect a similar utilization. So to that extent, I don't see any substantial investment on new capacities in FY23. However, the four-wheeler plastics division, which I had mentioned earlier, and also for possibly the emission product line, which I had mentioned earlier, those probably will be running at about 90% or so. So we do expect certain capacity enhancements in these product lines, and also to grow the metallic business further, because metallic business also runs pretty much an optimum capacity for each model. So for the new models, we will be probably expanding our footprint into a bigger facility and maybe investing certain money in deeper backward integration of a powder coating facility so that we are able to get better realization per vehicle for our metallic business. So these would be some of the things which we would be investing in for next financial year.
Okay, that was very helpful. Thank you.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Harshil Shah from Annual Research. Please go ahead.
Hello. Hello.
Go ahead.
Yes, sir.
Yeah, so can you help me with net cash on books, sir, as on Q3FY22?
It is net cash is 56 crore.
Net cash is?
The bank balance of 190 crores, and if I take the debt out from that, the net cash is 56 crores.
Net cash is 56
Debt equity ratio is 0.03%. I am carrying the debt of 14 crores in the books, other than the working.
Okay, sir. Thank you. That's it from my side.
Thank you very much. I now hand the conference over to the management for closing comments.
Well, I would like to thank you all for joining into the call. I really hope that we were able to answer all your questions. If there are any further queries, you may please get in touch with us or SGA, We will be happy to address all your questions and queries. Thank you, stay safe and stay healthy.
Thank you very much. On behalf of Lumax Auto Technologies Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.